Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, and for those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel I'd like to provide some stock analysis and also a short 5-minute trading lesson at the end, so please stay tuned. Okay, so we're going to start with a recap of a previous day's trading. It was a difficult day of trading. We are still seeing signs of the market correction, and I think for most people probably your overall portfolio may have been down between 3 and 10% overall. Certainly not a good overall day. So we're going to start by looking at what are the reasons for this and what is the potential outcome for the future. Okay, first thing I'd like to share with you is a headline here from the Wall Street Journal. This is dated March the 18th, and the headline here is tech stocks close sharply lower as bond yields jumped. So two things there. First of all, stocks went down quite sharply and the bond yields increased. So both of them for investors are bad things. What this is leading to is basically government bonds are being sold, jobless claims are going up, and the Fed has said they're going to try to pledge more easy money policies. So let's have a look at what's happening here. So first of all, technology companies and other high growth stocks did succumb to another sell-off. So we did see that there was significant downturn in the market. One of the main reasons for this, just at the bottom of the article there, is the Fed has increased the median projections for growth and inflation based on the latest round of the stimulus. So the key fear factor here is the fear of inflation. It is still there. It is still a worrying sign, and this is what is returning back and causing the significant market correction to kind of continue with this. So what can we learn from this, and what was the other negative factor that happened yesterday? Okay, so this is another headline I'd like to share with you from Bloomberg. This is dated March the 19th, and the headline here is oil's plunge was a sign of a market that got too bullish too fast. Futures plunge as much as 9.9% after a strong rally this year. Technical indicators were showing a correction was overdue. So certainly from November, December, January and February, we have had quite a significant growth in the market. It has been very bullish, and what we can see here is a sign that with the oil's plunge, this is indicating that the market was growing too fast and a correction was necessary. So what does that mean for us as investors? For us as investors, that basically means we need to hold our shares in stocks that we believe in terms of the long term. The penny stocks, we need to consolidate them in terms of, first of all, taking profit. Second, if you feel as though the risk is too much, then it's certainly a good idea to cash out and move the money into long-term growth plays. I have done that with a number of penny stocks, tick symbol GAXY, that one I have cashed out with, and also IQSTAL. However, there's nothing wrong with the businesses. The businesses are sound and fundamentally good. The issue technically is A, they are a risky penny stock. B, profits were very, very good in them, but the main issue was the lack of buying opportunities through the trading at 212, which has driven down volume not only in these two stocks, but in many other stocks as well, in terms of the penny stocks. So they have become more difficult to trade on certainly the mainstream apps. I believe it's also difficult to trade OTC apps on Webull and Robinhood. So this also affects volume, and this has made the risk factor more significant. So as investors, what we have to do now is we have to look at diversifying and looking for our portfolio to grow, certainly for the long term. Okay, so stock analysis for today is for ticker symbol LKCO, Luokung Technology. This is a stock that I have carried out an analysis for before. It's a stock that I also have invested in, and I'm also certainly going to look at investing again. I'm not currently investing, as I did sell once the stock went down quite significantly. And for those of you who have held on, certainly well done for believing in your stock, and you have been rewarded. Yesterday we had an excellent day in this stock, going up in excess of 20%. The previous day it also went up in excess of 50%. It's currently close of play previous day of trading at $1.85. So that's very, very positive. There was some good news on this, which we're going to look at now. And I'm also going to share with you strategy for this going forward and a potential entry point, not only for myself and also for other investors in this stock going forward. Okay, so if you're looking for more detailed information regarding why this stock is such a good stock in terms of investing for reward, please refer back to my previous video where I did carry out detailed due diligence on this stock, what they do and why they are potentially an excellent stock to invest in. What I'm going to do now is look at what's happening right now in the market with this stock. So first thing I want to do is share a headline here from the Motley Fool. This headline is dated March the 18th. So the headline here is why Luokung technology stock climbed today. So obviously we can see the stock is listed on the Nasdaq. It was making significant gains. This Chinese mapping technology company has said that it's previously announced an acquisition of eMapGo Technologies, a provider of the navigation and electronic mapping services. So this is certainly good news in terms of growth. The company have acquired another business. This is positive news. So let's look at what the details we can see for this. Okay, so as investors in ticker symbol LKCO, so what I would like you to do is in your diaries, I would like to add in these dates in terms of this stock. So first of all, we've got the 3rd of May 2021. This is going to be the hearing date. The 5th of May is likely to be the decision day. So these two dates are very, very important in terms of providing a very strong catalyst for this stock. So for new investors and people like myself and everybody who has not yet invested in this, certainly going forward, we'll have to look at volatility. We have to look at a pullback in terms of investing. But I'm very, very confident after the 5th of May 2021, we're going to get positive news. And this is going to lead to a significant spike in this share price. So currently we're looking at around about $2. It has reached $4 on a high. So in terms of my prediction for this, I certainly see this stock going in excess of $4 once the announcement on the 5th of May has been made. So certainly we're seeing positive momentum already. Going forward, that doesn't mean investors cannot still jump in. So now let's look at a possible strike price for this stock. Okay, so let's look at a possible strike price for this play. We did see on the previous day of trading, it did cross the $2 mark at going over $2.04. And then it closed at $1.85. So I do anticipate a lot more volatility going forward. The key dates that we need to look at as investors, 3rd of May 2021 and 5th of May possibly for the outcome of the case. I am very confident that that is going to be a positive outcome. However, you know, as investors, what you do have to do is expect the unexpected. So if I were to invest in this play, and if anybody else were to invest in this play, the target price from my point of view would be looking at a pullback, and that pullback would be anywhere close to $1.50. So if we can catch this play at $1.50, that would be a good entry point, with the objective of holding this stock now up till the 5th of May as a minimum. So once we get the news on the 5th of May 2021 and that news is positive, we can certainly expect a spike up close to, I certainly think in the initial short term, up to $4. If the news is bad, then this stock could certainly go back under $1. So high risk, high reward, but certainly we're not over with this play. So ticker symbol LKCO. Okay, so it's now time for lesson of the day. Today's lesson is going to be looking at a reverse stock split. So this is something that will happen from time to time with some companies. So let's have a look at what this means. Okay, so first of all, what is a reverse stock split? So reverse stock split is a measure taken by companies to reduce the number of outstanding shares in the market. So existing shares are consolidated into fewer proportionally more valuable shares, resulting in a boost to the company's stock price. So let me give you an example of what that might mean. So let's say, for example, in the future, if we take American Battery Metals, currently trading roughly around about $2. So once American Batteries Metals is looking to enter the NASDAQ, that one option could be a reverse stock split. So if you are holding, let's say, 10 shares at $2 each, so your total value is $20, but each share is worth $2. So a reverse stock split could be reducing those number of shares. So instead of having, let's say as an example, 10 shares at $2, you now have 5 shares, but not 10 shares, but the value is still the same. So 10 shares at $2 gives you a total value of $20. So this would now be 5 shares, but the total value would still be $20. So now what will happen is each share will be now valued at $4. So instead of each share being valued at $2, it will now be valued at $4. So I hope that makes sense. So it's basically, as an example, in the example that I've given you, it's doubling the value of each share, but it's also reducing the number of shares that you have in half. So the advantage that this gives to the company is it gives it a higher value, which is one of the requirements to enter the NASDAQ. So it doesn't affect our investment in terms of the overall value. So let's have a look at some of the key takeaways for this. So first of all, we can see that it boosts the stock price by decreasing the number of shares outstanding, has no effect on the company's value, has no effect on the company's market cap, and the value remains the same. So it's normally done to prevent a company from delisting. So if a company may be, let's say for example, trading in the NASDAQ, the share price is going down below $1, in order to be delisted from the NASDAQ, the company can improve their image, their visibility by doing this reverse stock split. So it cancels its outstanding stock, redistributes the shares to the shareholders in proportion to the number of shares they own before the reverse stock split. So I hope that helps. Thank you very much for joining me again, and stay tuned.